So, let's review Berkshire Hathaway's major purchases and sales of the past year. In fact, they just surged on speculation, and Buffett never trusted such ways of making money. If we look at the airline and bank sale, then Warren Buffett clearly closed his positions prematurely, losing a lot of money. Welcome to the Coin Post. Barron's, probably the best investor magazine, reports that Warren Buffett's company, Berkshire Hathaway, remains badly behind the S&P 500 for the second straight year. I mean, in 2020, the legendary investor did not stand aside the market, he sold and bought a lot of various shares. However, the S&P 500 wasn't even close to profitability, and it was the most unexpected year with the COVID-19 and everything. Give us a thumbs up if you follow Warren Buffett's deals too. And let's get going. So, let's review Berkshire Hathaway's major purchases and sales of the past year, and we're starting with airlines. In early May, it was reported that Warren Buffett had sold the shares of all airlines in the Berkshire portfolio, namely American Airlines, Southwest Airlines, Delta Airlines, and United Airlines Holdings. The value of all four companies' stock in 2020 is currently in the black, but there is a problem. Warren sold them after the March crash, and since then their price has risen significantly. Let's take Southwest Airlines. Before the coronavirus, it cost $54. In May, when making a deal, it was $29, and today it's $46. Warren's motivation was that airlines business is a big if because of the pandemic, and it's not gonna return to pre-crisis levels anytime soon. He was right, for sure. The airlines around the world didn't go bankrupt only because of government support in the form of loans for billions of dollars. And logically, their shares could plummet even further. But investors believe that after the victory over the coronavirus, life will get back to normal, planes will start to fly as they used to, and you know what they say, buy in the crisis, so you just do it. Now that the vaccination has actually started, that belief has become stronger, and if Warren took into account not only reporting rate, but the behavior of private investors, he could have sold those shares for way more money. The second major sale of the year was the banking stock. Buffett significantly reduced or closed his positions in a number of financial companies like JP Morgan, Wells Fargo, and Goldman Sachs. However, Warren did not sell his beloved Bank of America, and there was no comment on that one. I can assume that leaving the banking sector was linked to the risk of an increase in delinquent loans. I mean, we're still in crisis, and despite the support of the US government, people and businesses lost a lot of money, and they won't be able to pay off debts. Moreover, the Fed promises to keep the interest rate at zero for another couple of years, which also limits the bankers' opportunities. Could Buffett have feared another Lehman Brothers bank story, which became the catalyst for the 2008 crisis? Or was he just doing what he did with airlines, selling a business with no potential? Here you could correct me, saying Goldman Sachs actually made a profit last year, though only $30 per share. But few other banks can boast similar results. They're all in the red now, especially Wells Fargo. However, Goldman Sachs and JP Morgan made their profits in the third quarter, largely through trading in securities. In fact, they just surged on speculation, and Buffett never trusted such ways of making money. So that would be it with the main sales. Next, let's discuss Warren's major purchases. Since 2016, Warren Buffett had been sitting on a suitcase with more than $100 billion and didn't buy anything big until July 2020, when he made a deal for almost $10 billion to buy the assets of the Dominion Energy Company. If we look at their stock today, Warren still hasn't made much money. Many now expect that 2021 will be the year of real sector companies, including energy companies. Growth in these securities has accelerated since the first news about the vaccine, and the oil prices make me glad too. Not a big one, just for $564 million, but still a significant purchase was Barrick Gold, the Canadian gold mining company. The media portrayed Buffett as having bought gold, which he had previously criticized. In fact, what he did was, he only bought the company that makes it, and it's a promising business at the moment too. If we look at the stock price, it's a few dollars less since Buffett bought it in August. But it's not the company that is to blame, but the gold that went into correction after hitting a new all-time high. It turns out, Buffett bought high. And the big purchase number 3 that came to light at the end of August is a $6 billion investment into 5 Japanese companies: Mitsubishi, Mitsui, Sumitomo, Itochu, and Marubeni. If you look at Japan's main stock index, the Nikkei 225, in 2020 it rose 15% and then hit a new high since 1991. Of the companies that Warren bought, Itochu was the only one in the black by the end of the year, but the total stock price rose in all 5 after the purchase. It's also worth mentioning the Snowflake IPO, where Buffett invested $250 million buying shares at about $80 a share. And immediately after they went on the exchange, the price surged up to $220 and are now traded at $280. And this is probably it with the main Berkshire Hathaway deals in 2020 that we know about at the moment. So let's sum it up. If we look at the airline and bank sale, then Warren Buffett clearly closed his positions prematurely, losing a lot of money. As for the purchases, so far none of them brought any significant profit, except for the Snowflake IPO. Well, shall we put Warren out to pasture? I personally don't think so, because the Oracle of Omaha has never been a supporter of market speculation, and buying stocks with a year's perspective is still speculation. Warren is a long-term investor, and I quote him, "If you ain't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes." If we look at Buffett's deals from a different perspective, what he's doing is, he's reinvesting into the real sector. And now everybody tells us that these stocks are gonna rise in 2021 as the economy recovers. At the same time, Warren gave up shares in companies whose business is a big if due to the pandemic and the current monetary policy of central banks. Whether he is right or not, we'll find out in a few months hopefully, when it becomes clear how much demand for air travel has recovered and how banks are doing with repaying their loans. But that was just my point of view. You can share in the comments if you agree with it or not. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.